Okay, so let's make a full breakdown of the situation that we currently have on NZD JPY. Now, starting from the monthly time frame, what we can see. Now, on the monthly, we can see that the market has just created a very strong impulse to the downside, followed by this correction. Now, after an impulse and a correction, what do you expect? You expect the market to give you a nice move to the downside. Going down on the weekly time frame, what do we see? Now, on the weekly time frame, in our previous analysis, we had identified three bearish patterns. First of all, we had identified the fact that we had a triple top at this area from which we expect the market to give us a move to the downside. We had also identified that this triple top had actually the form of a W formation, again a bearish pattern, and we had also identified that after this candle here, as you know, we spoke about this formation many times. I also made a YouTube video just about this pattern. And after a pattern like this, you expect the market to fill in this wick. Why? Because this wick on lower time frames will simply be an impulse and a correction. And the correction is simply the wick. In fact, if we go down on the daily, what we could see from our previous analysis. On the daily, we could see that we had previous support, now turn resistance at this area. All this previous support given by this candle here was then turns resistance inside of this area. In fact, in all this move to the downside, there is one candle which is not related to the move, which is exactly this candle here, which is a strong supply area from which we definitely expected the market to give us this move to the downside, which is exactly what the market just did. And I will link in description this previous analysis. And where is the next opportunity for NZD/JPY? Now, the next opportunity at this point comes after the market will have created a retracement. Why am I saying this? Because from a monthly and weekly perspective, more downside is definitely possible. And from a daily perspective, we have now broken below the structure. All this level here is now very strong resistance because it was strong support here, against support here, and all this support is now turn resistance inside of this area. So if the market will go and retest this area, what we will be doing with students. Now, before I show you that, let's first go and give a quick check at what we have from an NZD and a JPY perspective if we look up the COT data, which is the commitment of traders, so what the biggest banks and institutions and hedge funds are doing in the market. Now, from an NZD perspective, we can see that with the last report, hedge funds have again decreased the net positions from 6.9k to 4.9k and then 3.2k with the last report. So definitely net positions decreasing, meaning that NZD is getting weaker because the difference between longs and shorts is going toward the short side. In fact, we can see the shorts remain the same. However, longs decrease from 21k to 18k. And if we go and see what we have from a JPY perspective, we can see that we don't have much change, but we do have a quite high amount of net positions with 50k longs and 27k shorts. So definitely a strong JPY is still expected. And if the market will give us a retracement after this impulse, all this previous support will be turn resistance inside of this area. So what we will be doing with students inside of this zone, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of this impulse, correction, and impulse pattern to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.